the conference, and really it was a fortunate to meet so many global investors, some large corporates, and to get a 360-degree view as to where India stands right now in this big global turmoil. The best guy to have right now with me is the man himself. He's been the key man to execute this conference. He knows in and out as to what the corporates have been saying, what these global funds have to say as far as India is concerned. So let me ask him directly as towards the mood in the conference. Rajat, you've been at the forefront of this two-day large conference that you've been holding in India right now. First, on the general mood towards India, are we done with the correction, or you think there is more pain left, at least in the near term?
Well, I don't know, but it's kind of funny that for the last 6 years when we have been doing this conference, typically in September or the first day of the conference, the market goes through a classic bottom formation. I am no specialist in technicals, but I just think that the last 1 month of correction has been quite excess, right? And it has corrected many of the previous excesses which were being made on the basis of hope, right? The general mood amongst the corporates is very clear that today they are more positive on the growth over the next 6 to 12 months than what last 6 to 12 months have been. I think India has been just painted with the same brush amongst all other global markets as far as the selling is concerned. But as and when rationality starts prevailing in, people will believe that, hey, this is one market which probably looks the most attractive amongst the options that we have. And I won't read too much into what's happening today in terms of a big recovery. But I think if there was ever a better time to buy equities in India in the last 1 year, this is the day.
Oh wow, that's a good positive start. But Rajat, we read your strategy note as well. You met a lot of corporates. You said the corporates are a little confident, but is it going to get spilled over into the earnings as well? Because ultimately, the earnings are the numbers which can take this rally to a sustainable level. So in that context, do you think earnings are going to we're just at the cusp of a turnaround in terms of earnings as well?
Yeah, look, while we have lived through a downgrade cycle for quite some time, and the last 6 months have also seen a lot of downgrades, we keep on reiterating that the most important component of this downgrade has been the global commodities. When oil falls from 100 to 50, it first leads to downgrades in all the producers. But the benefit of that lower commodities takes some time to trickle in, and that is what the India story is. And I think you are just 1 or 2 quarters away from a double-digit earnings growth coming into corporate India.
So what then you will play in terms of sectors? What are you recommending clients?
When you come to look at investing in India or within India, you have to look at stocks which will benefit from a both combination of volume growth and better margins, right? I think many of the companies in autos, private financials, oil marketing companies, we keep on talking about them, but we think that there's a long way to go for them. Select consumer discretionary items, right? It has to be somewhere a very bottom-up approach, because there are enough companies in this slowing growth environment which are still doing very well, and this is the time to buy into them.
Sure. I was just going through the two-day list that you have, in terms of corporate line, which was there in the main track. You had some interesting private sector banks like ICICI Bank and Yes Bank representing the banking sector, so to speak. Broadly, given that the way the bank stocks have corrected, especially the private banks have corrected from the peak, you think there is an investment rationale now to buy into those private sector bank stocks?
Well, yesterday Ms. Kocher presented that how she has doubled the ROE of ICICI Bank in the last 6 years, and they have a guidance to improve this ROE further, right? With a capitalization which is one of the best, right? I don't see how perceptions can carry the de-rating far than the underlying improvement into the fundamental ratios. Mr. Rana Kapoor did present it how they continue to be at the top end of the ROE curve of this banking system over the next few years. We had Mr. Ramesh Shokti, who reiterated that his outlook on his growth and asset quality is better today than what it was 1-2 years back. I think the only thing as an investor that you should be excited and not worried about is that the valuations today are far more better for you to buy into these names, right? When you buy today, you make a lot of money over a period of time.
Sure. The other thing which even I noticed, meeting a lot of clients as well as corporates in the conference was there seems to be a bit of a dichotomy between what the FIs think at this point in time and what the domestic funds think at this point in time. While the domestics are seeing inflows, because of redemption pressures, the FI seems to be on the sell side. What is that you've been advising, especially your foreign clients, as to what they should look at when they look at India at the current levels?
Look, as I mentioned, that India is being painted with the same brush that all the other global markets and emerging markets are being painted with. But more importantly, if I am a global fund and if I am running a $5 billion fund, I get a redemption of $500 million, right? I can't be so rational on what to sell and what to hold, because that's a large part of my fund which is getting redeemed. That is the story of most of the global emerging market funds, and India is seeing its own share of pain in that, right? Once this pain is over, and it will be over soon, right? The continued domestic buying itself can take this market quite respectably higher than what it is trading today, right? And foreigners love to buy equities in India, just that this is a very big macro global headwind which is leading to outflows from them.
So I know you've been bullish on banks, you've been bullish on autos. Apart from that, where you think valuations are attractive and earnings growth is likely over the next couple of quarters and for a couple of years, where investors should look to buy into this correction?
Like as I mentioned, oil marketing companies, some of them have corrected by 15-20%. One of the stocks that we had upgraded couple of quarters back was Z, where even Puneet today presented at our conference. We think that if the last 10 years consumer companies in India paid out of their margins to the commodity producers, in the next 5 years they will be paying to their advertisers and marketeers. So right from companies like CNBC to Z will benefit out of this trend, and in the listed space, Z is the best place to play this theme. So banks, autos is one side, oil marketing companies is another side, media is another, and then see pockets of individual mid-caps, bottom-up stories that you can find out.
You know, Rajat, the other interesting aspect which I want to ask you was on the PSU side or on the government side. We've heard a lot about Make in India theme. Government is looking at pushing the coal production higher. You had the coal minister at the conference yesterday. You had some other policy makers as well. As far as the policy is concerned, we understand that some of the FIs have started getting a little disappointed on the policy front. What is your sense and what is the assessment that you make while talking to these policymakers?
Well, I think this is more of a question of a lot of expectation and delivery happening at a reasonable pace, right? So it's somewhere good that the expectations are getting reset. So now when the delivery will move at its own pace, people will be more excited, right? But coming back on the policy delivery, I think lot has been happening, but just that the problems have been so much more, right, that you want all the solutions to happen very quickly, right? I mean, today we can talk about GST not happening through, but we had many other bills which would have spoken a year back, which have seen passage through the parliament, right? Suppose GST will happen, right? Then maybe we'll move to the next area of concern. That's what, we like to talk about. I think there's enough happening, but more importantly, this is a time when corporates, banks, all will have to put their act together. Banks will have to clean up their books, and corporates will have to start looking at some investment cycle returning back for this aggregate growth to get better from where we have. This is a very, very opportune time for India, when we are not just beneficiary of a very positive monetary policy that has been led by RBI, but also on the right side of this global commodity collapse, right? Imagine a saving of almost close to $50 to $75 billion happening annually, which you are going to start spending on capital expenditure, right? I think the triggers are many. Sentiments, of course, are weak today, but sentiments take very quick time to change.
Sure. Well, you heard from Rajat Rajgarhia saying the sentiment is weak, but this is opportune time for long-term investors to buy into the India market. Back to you guys.